Hello and welcome back. Happy Tuesday. Thanks for tuning in. This week, I'm going to get into some forecasts from some of the major players, real estate forecasts, obviously on pricing and whatnot, for 2024 and 2025. But I want to look at 2024 and see how accurate those forecasts were. And also, I've been talking with a lot of people, and there's still some FOMO out there. And I explained to some of them, I said, look, you should be worried about fear of overpaying, not fear of missing out. And I was talking to somebody yesterday on the phone, one of you viewers, you might be watching now, and it was one of their children was looking at buying a house, and there was a little bit of FOMO in there. And what I suggested was just get them to lowball them, right? Because you need to hedge yourself against these prices. So again, that FOMO should be FOOP, or fear of overpaying. That should be the legitimate concern. And I am seeing a lot more of that. I'm probably seeing more of that than I am FOMO these days, but there is still that FOMO attitude. And they hear things from the media, prices are going up, and again, stuff like that. But this is all ties into this video where we're going to look at those forecasts from those big players that create a lot of this FOMO. But first, let's look at what we found on X this week and some interesting news stories to check out. All right, starting with the good old CPI, just got released today, and this is from Kirk Lubimov, I think it is, sorry. Canada CPI rose 1.8% year over year in December 2024, and it was 1.9% in November, in case you forgot. CPI excluding food was 2.1%. The temporary GST, HST contributed to the food portions CPI deceleration. On a monthly basis, inflation was down 0.4%, but seasonally adjusted, it increased 0.2%. So that's pretty interesting. That shelter cost increased 4.5%, with rents up 7.1% year over year. Housing costs are still growing faster than wages. There isn't much support for Bank of Canada to do any more interest rate cuts here, and with tariff/response around the corner, it's best they pause to see what happens. So we will see what happens, because I believe that's next week, the Bank of Canada rate announcement. One of the people I also follow on X, Table Salt. For what it's worth, I was planning on buying real estate in 2025. Those plans are now canceled. I feel others might follow suit. I asked him why. I didn't receive a response as of this video, but I'd be interested to know why those plans were canceled. So this next news article has been trending today. I've seen it a lot lately. And Tracy Wilson here posted this. These two tweets in my timeline at the same time is ironic. Kingston declares state of emergency due to hunger. Mark Garretson celebrates. So Mark Garretson is the MP for Kingston. He obviously doesn't celebrate the hunger. But today's news in Kingston. Kingston, Ontario declares emergency as roughly 1 in 3 households struggle with food insecurity. Councillor says residents are drowning despite doing their best to afford meals. So wow, it seems like things are pretty bad out there in Kingston. And of course, here's Mark Garriston. Update. Kingston and the Islands now has nearly the same number of registered Liberal supporters as we did during the 2015 local nomination race, which led to the selection of yours truly. People here are excited about the new chapter of the Liberal Party of Canada. It goes on to say whatever. But so 1 in 3 people are struggling to afford food, but they're excited that they get to keep this guy, I guess. Kind of odd. And here's one from Shazzy this week. This is heartbreaking, but so very common now. Note, we don't have foreclosures in Ontario. It's going to be a power of sale. And this is from Indians in Toronto, January 12th. Anonymous member posted this, power of sale / foreclosure. I'm going through financial hardship and haven't been able to pay my home mortgage for the last few months. I got my mortgage with one of the big 5. In such cases, how much time we have before the bank starts a process of foreclosure or power of sale. If anyone has gone through this, it would be helpful to connect and learn more about the process. P.S. There is no equity in the house. Negative $150,000 bought at peak, and spoke to the bank already. They didn't offer payment deferrals or any alternative option. And from my buddy Rob Marsiglio, he's in Durham region. He's a realtor out there, knows his numbers out there if you're looking for a realtor in that area. For the first time since I've been recording it, almost 3 years, resale months of housing inventory across the GTA eclipsed six months of inventory. Important to note that this is just one point in time, but goes to show that sellers have come to the market much faster than buyers in 2025. So yeah, he's been tracking this for 3 years, and it is the highest in 3 years, and it eclipsed 6 months of inventory now. So we are seeing that inventory increase year over year, and it's getting higher highs, as I always say. Yeah, so this next chart's pretty crazy. Inverted 180, whoever that is, posted this distribution of GTA condos by cash flow position. Units completed in 2023 and H1 2024. I believe that's first half of 2024, if I'm not mistaken. And this is from Urban Nation, Terranet, and CIBC. So some pretty reputable sources here. And look at the negative cash flow. So like 30% around are negative cash flow, $1,000. A month. And these are all condos that have closed from 2023 and the first half of 2024. So what's that, 18 months? And lots of them there in the negative cash flow territory and not as many in the positive cash flow territory, like 5 to 7% or so that are $1,000 plus cash flow. They must have had big down payments because obviously you're not going to close with 10 or 20% down and be in a positive cash flow position. For the most part, I'm sure there might be a few, but maybe they purchased them in like 2017 pre-construction or something, really long closings. More on the condos here from Steve Soreski. New condo sales in the GTA finished the year at a 28-year low. No housing accelerator fund is going to turn the ship around. Dog crate condos are toast for the next few years. Wow, and this is the GTHA annual condominium apartment sale. So 28-year low. And this is not per capita, so we have a lot more people in Ontario now, but sales are still at a 20-year low. If you put per capita, it's probably at like an all-time low right now, which is pretty intense. Another one from Shazzy here, Shazzy Goalie. Toronto landlords are now offering incentives like free rent and other perks to attract tenants. This map shows 1,852 apartments with move-in specials currently available in Toronto. This was almost unheard of before. Let's dive into some examples. Actually, I talked about this in a video last year, and I think it was in Calgary or somewhere they had a lot of move-in incentives. But yeah, here we are in Toronto now. We'll go through these real quick in this thread here. All right, here's the first one here. This is a rent range in the building, I guess. 1 month free they're offering at this building. Here's 77 Gerrard West. Exclusive offer. Receive 1 month free when you move in by February 1st, 2025. Special incentives for medical professionals. Ask the team. Terms, whatever. Maddox Sherburne here. Move-in special. Limited time offer. Up to 2 months free plus complimentary in-suite Wi-Fi. So yeah, really pushing the units there. They just keep going on and on here. 2 month rent free. Promo 2 month rent free on any 12-month lease signed before the end of whatever some month. Yeah, tons of them here. 1 month free on all homes. This is Toronto House. Yeah, anyway, it goes on. There's a bunch of examples. So yeah, they're offering incentives now to rent these places because they're getting harder rent. More inventory, prices are coming down, right? And we're going to look at that data in a second also. Now, this post is a very interesting post here. This guy breaks down the numbers on owning a house, and I'm just going to skim through them quickly to the bottom, but you can follow him if you want. Ryan Greiser, he's a certified financial planner there, CFP, I believe that's what that is, and he says, think your home is your greatest investment. In 2019, I bought a $463,000 house thinking the same. Here's the shocking math that changed my mind forever. And he goes into all these things. This guy's got charts, so I'm going to skim through them. It's a pretty long post or thread here. After running numbers on 50 years of home ownership, purchase price, maintenance costs, major repairs, property taxes, insurance, my expected annual return, and he gets into, I'm not going to open up all these little threads here, but yeah, here we are. Here's what kills your returns first. Mortgage interest, 30-year loan at 3.75%, $278,000 in just pure interest. That's 60% of the original purchase price. And that's interest, and now that's just 30 years, right? But you should have it paid off by then. And then he gets into some other things here. Annual expenses in year one. Property tax is almost $7,000. Insurance $1,800. Repairs $3,300. Lawn care $2,340. That's a lot for lawn care, but maybe you have to buy a lawnmower and whatnot. Other $1,068. And you can see, look at the annual expenses. Look at them go up over time. Ever heard of the 1% rule for maintenance? It's way off. Over 50 years, I'll spend almost $550,000 on major replacements, 9 times exterior paint jobs, 4 times HVAC systems, 5 times water heater, 2 times roofs. Anyway, he goes into all these maintenance costs, and they just keep building, right? Well, I think these are cumulative maintenance costs over the years. And but Homes appreciation value. Sure, at 4.5% appreciation, my $463,000 home will be worth $4.18 million in 50 years. Sounds amazing until we do the math in a minute. So that's almost 10 times. It's 9 times, let's just say. And you can see the appreciation curve there. Total projected cost of my ownership over 50 years, $2.341 million. That's not a typo. So that's a lot of cost, and I believe it. Things are expensive, and maintaining a house and all the rest of that. Property tax is always going up, but that's over 50 years. And he breaks it down here: 2.3 million, 278,000 in mortgage insurance, 1.5 million regular expenses, 550,000 in major replacements. But then you have a $4.18 million asset, true, but that's only a $1.737 million gain before capital gains tax, 50 years of inflation, opportunity cost. So I don't know what he's talking about capital gains here, but there is no capital gains on a primary, but I think he's just throwing it in there just to compare. And then he gets into the hard truth here. Your primary residence is probably the most expensive thing you'll ever buy. And in my case, the numbers don't lie. An approximate 49% return on investment or 0.8% annual return will make it my worst performing asset. So why do I own my home? Because not every financial decision needs to maximize return on investment. And he goes into some examples. So just so you have it there's a 0.8% return on investment. I think most people would run for the hills if you told them that's what they were going to get. But the problem with real estate is you have to keep feeding it cash flow to keep it going. You have to repair things. You have to pay the taxes. It doesn't just sit there and appreciate. And I think a lot of people don't actually think about that. Now, when you see these massive gains within a few years, of course, that's great. You know, who wouldn't buy real estate? But that's not normal, seeing massive returns within a few years. What's normal is that 4.5%, 5% return a year on average, right? All right, last one here before I get into this week's data from Floyd Maris's, whatever his last name is there, Marinescu. The Globe and Mail speaks the inconvenient truth that politicians won't. Homes can't both be good investments and affordable. Making homes more affordable, for instance, means bringing down the prices of existing homes, something homeowners who are sitting on big capital gains on their primary residence aren't eager to contemplate. Bullseye. 100%, right? Virtually every housing policy and pundit dances around this point when our entire political economic system is aligned towards raising land prices regardless of which party is in power. He, JT, Justin Trudeau, kept saying he wanted to make homes affordable for young buyers while simultaneously insisting that home prices had to remain high to ensure the net worth of older Canadians wasn't hurt. The public is gaslit into believing we can blow and suck at the same time, making homes affordable without lower prices. By definition, that's not possible. And I agree with this 100%. You can't make homes more affordable without bringing down prices. And this is, no politician will say that because they believe it's career suicide. And he goes on to say this. No astute politician is rushing to antagonize the 2/3 of Canadians who already own a home by engineering a big decline in house prices. So we remain stuck. No matter how much our leaders talk up the need to make homes more affordable, the political calculations lean entirely in the other direction. Now, I disagree. I did a video, or I did a chart, and I think that there's more Canadians and existing homeowners with children and grandchildren that don't care about the equity in their house. They're not investors, they're not speculators, and they would like to see prices come down so their children and grandchildren could afford a home. So I think that they're just scared, but I think that point is wrong, and I think that there is more Canadians, homeowners or not, that want to see prices come down. Maybe Canadians aren't willing to make the hard choices because no one is presenting them with the real choice. Compare the housing plans of the three major parties. In mechanism, scale, and ambition, they can barely be differentiated when it comes against the scope of the problem. We will not crack the housing problem without tough choices. Make land, what makes real estate appreciate, a less attractive long-term investment. Shifting taxes from income to land value will lower its returns as an asset and therefore price, while better rewarding work and productivity. Any politician or policy silent on this is simply ignoring the real problem. That's a very well thought out post, and it's very accurate. Besides, like I said, I have the one disagreement, but that's just my opinion. Okay, now let's get into this week's data. And I'm going to compare some forecasts from a couple of big brokerages and Korea. Now, these guys getting paid a lot of money, these economists and the CEOs, whoever's getting this data together, unlike my data, which I don't get paid for, I do it voluntarily, they're getting paid big salaries, especially at Korea and stuff. So they should be fairly accurate and, I don't know about unbiased when it comes to the real estate brokerages, but or maybe all of them, but let's look at their track record and see where they stand. So first, we're going to start with a current forecast for 2025 and 2026. I'm not going to get into all the literature here. Okay, so they have the chart here. Now, on this chart, I just want to note that they go back to 1980 on this, and previous ones, they don't go back that far, but I'll get into that in a second. So again, this is the 2025 forecast. Just came out January 15th, I think it was. And now this is the actual number. I circled it, 490,376 sales in Canada for 2024. They've calculated them all. And of course, you get these projections for 2025, 532, and so on. And they had a 7.3% change from 2023 to 2024. I think 2023 was 445,000 sales. But again, there's some discrepancies with the numbers. Please do the math in the comments and correct me. I went over it. I'm like, this is basic math, but it's just not making sense, some of it, but I'll show you now in a second. Okay, so first let's look at this data here. Now this data goes back to 1980, and I've circled there on the left 1989, and you see where the sales like peaked, right? And I've compared it to now. They peaked in 2021. 2021 we had a big peak, but 1989 was kind of shared with 1988. But look at the year after that, which would be 1990. Sales dropped, and of course sales dropped in 2022 and 2023 in Canada. But again, that 2021 wasn't shared with 2020 as much because of the pandemic, most likely. Then you look at how many years after they started to rise after 1990 there, that drop after 1989. They rose up again, just like they're doing now, and they dropped again in 1995. And that's what brings us back to that article from last week, where it was like a real estate depression. Nobody was buying houses. They were cheaper than ever, and the interest rates were low, and they weren't buying them. So we're on track to see that same trend. They spiked, they dropped, they're starting to go up again. Now, I've overlaid in light blue there my own forecast of what's going to happen if we do repeat that cycle. And the last one there, 2027, will be 1995, very same timeline, and number of sales will decline again. So they do go up, but they'll go back down. So right now we're seeing this rally. Hey, the sales are up. In 2025, they're going to be up again. But then they're going to turn around as the recession and this cycle really kicks in. Now we have the historical price chart, or average price for Canada. This is not the index. This is actual average prices. And again, they don't include this chart. They include a table, but not charts in previous forecasts. But this one they do. And of course, they do predict prices are going to go up for 2025 and 2026. They're in the red. And here are the actual prices here. 2024 is the actual price, and 2025 is their forecasted price. So we're January 15th, so they have the data for 2024. So that is what we ended up the year at. There might be some adjustments because, sales are still being reported after the 15th of January for some properties. So there might be some slight adjustments, but it's going to be around that 689 there. So that's actual numbers. Okay, now we're going to look at the forecast for 2024. We're going to go back in time. Their most recent forecast was, they had one, I think, in the fall of 2023, but they updated it. So we're going to go with the most recent forecast here, April 12th, 2024, according to the latest quarterly forecast from the Canadian Real Estate Association. Interest rates, they go on, right? So let's look at the data here and see how their forecast was, see how it turned out, because we have the data now to quantify it. So here are the sales activity, number of sales, right? Of course, they weren't far off. So we're going to look at the data now for the sales. And the dark blue there was the forecast. We actually have the actual now. So let's look at, this is the 2025 one. And just to show you, I wanted to show you the difference. Look, so they go back to 2000 in 2024. They had data back to 2000. And now, mysteriously, they have data back to 1980. And every previous forecast prior to this January, as like this one here I just showed you, let's go back. So this one here went back to 2000. But all of a sudden we have data back to 1980. I don't know where they got the data, but we have this data now that goes way back, which is very interesting because I've been looking for this data nationally and we don't have it, right? So that was one thing I just want to point out that was very interesting here. So here, again, I have it at the top. This is the 2024 forecast. 445,000 sales in 2023, which was the actual numbers because this came out in April 2024. So these are actual numbers. 2024 forecast to be 492,000 sales. We had 490,000. So pretty accurate there on the number of sales Korea was. And their forecast was a 10.5% increase in that sales data year over year, right? Now, this is the 2025 forecast that just came out. So there we have the actual numbers. Like I said, 490,000. They had forecast 492. So very accurate, but they have 7.3 year over year change. So from 445 to 490, it's not 7.3, it's like 10.1. So I don't know where they got the 7.3 because they wouldn't have adjusted that sales numbers in April, and especially by that much. They would have had to adjust up to like 460 or something. Like it would have been a big number. So that number is questionable there, but we'll get back to that in a second. And here are the 2024. Here's the 2024 forecast for the pricing for the average price, and they had forecast 2024 at $710,468, and 2023 that was the actual. So they had forecast 710. We actually ended up at 689, but I'll have that data in a second now. So they were off on the pricing forecast, and they went. This is 2025 forecast now. Just came out in January. So this is the actual 2024 689,783, up 0.9%. Question mark beside that too because that number didn't make sense, or that percentage. And they're forecasting 722,000 for 2025. All right, so here's the actual numbers now from April 12th compared to actual. So again, at the top here, the number of sales, they had forecast 492,000. We had 490, very bang on with that. So good job there, Korea. And we had the original 445 from that forecast. And so it went up 10.5, or they had forecasted up going up 10.5 at 492, but it's actually went up 10.1. They had 7.3 on that previous one for the actual, which was very odd. I don't know if I still have it here. Let me just go back. Where is it here? 7.3. There it is. So this is the actual 2024, same number, 497, the 376, and 7.3. But when in actuality it was 10.1. So I don't know how they got that. I'm a little bit confused, but regardless. Same with this here. We had 689,000 for the price, was the actual price in Canada, as opposed to 710. So yeah, a little bit optimistic on that price there. They were saying we're going to go up almost 5%. We went up 1.8. But they had that actual number there. Look at that, 689, 783 and it went up from 677 in 2023. They had the actual number here, 689, 783, but 0.9%. So yeah, check the math there, pause the video, whatever you got to do. That's a 1.8% increase from that 677. But anyway, I don't know how they're coming up with these numbers. I don't know who's doing them, if it's a mistake or I'm missing something here, but it's pretty basic stuff we're dealing with. But anyway, so Korea, bang on with the number of sales, but way off, or a good bit off, a third. They only got a third of the increase that they expected. We were expecting 5%, and they got 1.8%, so just over a third of that increase. So pretty flat, actually, the numbers here. Now we're going to the next one. This is from the Canadian Mortgage Trends, but it is a RE/MAX forecast or statement here. Canadian home prices expected to see sluggish growth in 2024, and this is from RE/MAX. And this is from November 2023. So this is a 2024 forecast. Big franchise here, of course, RE/MAX. You know, they get a lot of say in the market, or a lot of exposure and media exposure. According to the company's 2024 housing market outlook, average prices will grow only 0.5% next year. We had a 1.8%, so they were below it, which is kind of unexpected. You'd think that they would be pushing the 5% narrative too. But regionally, they're expected to be pockets of strength, as RE/MAX said. 61% of regions it surveyed should see price growth between 2% and 7.5%. So 2 to 7.5% given the region. So let's look at the data here on this. Again, that's just the data there to show that it went up 1.8. They expected 0.5, so they were low on that, which again is odd for a real estate company to be below. They usually, again, pump the market. And here's the actual, the one with the question mark, all those ranges down there for all the different areas. Move my head out of the way here. and they went from what, negative 0.6 to, and then we started at 2% in PEI, and they went up to 9.6, and they had 2 to 7.5. So not too far off. Remax wasn't too bad, believe it or not. Now we're moving on to another big franchise here, Royal LePage. Phil Soper probably wrote this article. Let's see what he says. The Great Adjustment: Canadians to adapt to new reality as housing market returns to near normal in 2024. And this was obviously written near the beginning here. Let's see if I have a date on it. December 14th, 2023, this article came out. I'm just going to read this little blurb. After years of unprecedented irregularity, I would say going up, prices going up, but anyway, Canadians may see real estate market return closer to normal in 2024, according to the Royal LePage Market Survey forecast. The aggregate price of a home in Canada is set to increase 5.5% year over year to $843,684 in the fourth quarter of 2024, with the median price of a single-family detached and condominium projected to increase 6% and 5% to $879 and $616 respectively. So this is the Canadian, the Royal LePage aggregate price. This is not the Canadian real estate one. So there's two different aggregate indexes. And an index is something you make up yourself. You make your own criteria, and it's usually based on similar houses, like a detached 3-bedroom and a detached 3-bedroom, right? So, but I'm not crazy about aggregate prices, indexes, because they can just make up the criteria and change the criteria when you want. So they get into a lot of quarterly stuff, but you can clearly see here they're starting at just below 800,000 and going up to, I think it was 834, did they say, or 843, I should say. So yeah, we have a nice upward trajectory there on their price forecast for 2024. And again, this was, early in the year, the Fomo, get out there, buy a house, prices are going to go up, recovery, and everything's normal again, right? So now let's look at what really happened with Canadian house prices as per the Canadian Real Estate Association, which has all the data for MLS as opposed to just Royal LePage's select data that they make on their own. And you can see they're going in opposite directions. At the bottom there, we have the Royal LePage forecast, and this is from December 14th, 2023 for 2024. Using their own aggregate index, of course, look at it going up every quarter, it goes up. And the Canadian Real Estate Association actual data as of January 2025, this is not forecast, this is actual data now. And yeah, so they started like below 740, where Royal LePage started at like 800, and they went down and they came back up to around 723 or so, where they went to 743. So these numbers are like way off. Royal LePage, but they must sell a lot more of expensive homes than the average house in Canada. But yeah, one's going down with a little uptick at the end, and one's just goes straight up. So yeah, it goes to show you. So those forecasts, and I would say, I've said it before, and a lot of people would agree with me, like they want to sell homes, like actually both Korea and Royal LePage. But Royal LePage really invested in selling homes. Like Korea, they have members to pay their bills, but the Royal LePage, they need the sales. So they're really invested in making sure the sales happen and prices continue to go up. So yeah, be careful where you get your data, and don't buy into that FOMO, which I talked about in the beginning of this video, because a lot of people do create that FOMO, like, yeah, buy now, they're going to go up 5%, like you might as well just buy now, right? Because they're going up again, and again, the forecast this year is probably the same thing, 5%, right? It's a nice easy number to put on that. But again, it didn't work out, so be careful what you listen to. Unlike me, who's just making my own forecast here. I'm not an economist. I don't get paid a salary for this. These people are paying big bucks to economists, and but they're paid. They're paid to spit the narrative that they need to. They're not going to tell you prices are going to go down. They're going to get fired from Royal LePage. If they say that, they're going to get fired. But I don't know that for sure, but it makes sense to me. So there we have, we have it all in black and white there on the table too, but I'm not going to go over it again. All right, so now on to the national stats from December, the year end, and how things ended up here. And it wasn't terrible. I guess depends if you're a buyer or seller, but it wasn't apocalyptic yet. We'll see what happens in 2025, because this is when the fireworks start, as you know, as if you've been following what I have to say. So here we have December, the average house price in Canada, or the average property price, residential price, $676,000 for December. That's a 3.1% month-over-month decline, $22,000, not unheard of in December. A lot of seasonality there. Prices go down. 3.2% year-over-year increase from last December, $21,000, and we're still down 17.1% from the peak, or $139,000 on average. Now, we had a lot of places make new highs last year too. So we're still seeing declines, and places like Montreal and Quebec and I think Alberta, they're like at record highs or close to the record highs. So it just goes to show you how much Ontario weighs on the whole overall house price in Canada, because we're down. We're probably down like 20+%, right? And next, we're moving on to the monthly mortgage payment. It's now below $3,000. It's dropping there, which is good. Still very high, like $3,000 plus property taxes, plus maintenance and all those things. Like it's like $4,000 plus. But the actual payment for your mortgage with 20% down, regular interest rates right now, just under $3,000. So it's heading in the right direction, which is the important thing. $24,000 in interest in your first year if you do get that new mortgage. Yeah, only $2,000 a month, guys, just in interest. So yeah, it's still outrageous. That needs to come down more in line with, move my head here, $10,000 a year? That's doable, right? Under $1,000 a month in interest. But again, it's going to take lower interest rates, a little bit lower, not too much lower, and lower house prices to really get to that level. This one's very interesting here. We're seeing this gap close. So we're seeing rents come down. Again, they came down in December, $2,100, just over $2,100 for the average rent in Canada. The average mortgage payment came down just under $3,000, $2,993. So that gap is $884. Again, we don't have property tax and maintenance included in these things. But I'm sure people wouldn't mind if you have to choose $2,200 to own or rent a house and you have to pay some property tax. I'm sure you'd probably choose to own. But regardless, this is just the interest and the principal, and of course compared to rent. So $884 is the difference. It's almost $1,000 still, but it was $1,500 just in April. So just 9 months ago, we had a lot bigger of a gap. It was $1,600 at that first hump there. So yeah, we're seeing that gap close, and they're both headed down, which is great news for all you potential home buyers out there, and renters too, because rent prices are dropping. Total sales in Canada for December. So December was a good month. I think I've heard in Toronto, I didn't really get the numbers, like it was the worst December in however many years. I think 28 years old, the condos, yeah, with Steve Soreski there posted it. But overall sales in Canada, they were just a little bit above average. I think the average was 41,500 sales, and it was 43,000 something. So just a little bit above average. So not a bad December by any means for sales. And but prices, again, seasonally, they were down $22,000 on the average house, right? So, and moving on to the sales to new listings ratio, and these are all the Decembers outlined there, and it was 56.9% in December, and looking at the other Decembers there, the most recent ones, 2023 and 2022, 56.8, 56. So nothing really odd there. It's not going either way. It's just kind of, again, flat, just like the prices, right? And here are the months of inventory, a little bit higher than last year. I think it was 3.8 last December. December before that in 2022 was 4.1, but that was after the big drop. So that was kind of a scary December. So yeah, we're still holding. Inventory's kind of flatlined. Everything's flat. We're like in this holding pattern right now. Prices, inventory, sales, everything, right? So something's got to give. What's going to give? We'll see. And this is the months of supplier inventory for all months. And you can see I've drawn that dotted line or the dashed line there. That's about 4.5 months. We need to hit that to see some real things start happening. This is when it's going to really start affecting prices. And we got to like 4.2, 4.3 months. So we're not far off, but we're going to see that climb now. Look at it started to head up. It's going to head up into the spring. So we're going to see between April and June where it's kind of going to end up, because that's usually the peak. So keep an eye on that. If we can reach that 4.5 months, it's going to be a huge change there. It's going to be a big difference, and that's really going to affect prices. And we're probably going to see it. Like, we're going to see it sooner or later. Lots of supply coming online, rental supply, sales supply. It doesn't matter. People are listing. Okay, so that's it for this week. Let me know in the comments, do you see a lot of FOMO still out there, especially with springtime approaching? Or are you seeing those people that are more cautious, that are like have fear of overpaying, like I mentioned? And I think that should be the legitimate concern, fear of overpaying. And if you are considering buying a house, don't be scared to ask, how long has it been on the market? What's the history of this listing? And based on that, you can go in with a lower offer. You don't have to pay list price or close to list price. It all depends on that listing and the history of the listing and the comparable sales. But if you have that fear of overpaying, offset it with a lower offer, and that's how you're going to fix that situation. So anyway, let me know in the comments what you have to say, and until next week, I'll see you then.